What moves gold's price? Gold is the most important and strategic commodity around the financial world, and if you want to invest on it, you have to know about gold's drivers well. To analyze a commodity, we have to find both supply and demand drivers. But which one is more important for gold? Absolutely demand. Why? Because the gold resource is approximately stable and usually there is no supply uncertainty. What about demand drivers? Is it stable? Now, let's check the gold's huge price movement. After COVID-19 pandemic, gold was increased more than 30%. Why? Between 2012 to 2015, gold was decreased 50%. It's a huge movement. But why? We can check 2008 recession. Gold price rose up more than 100%. But why? Can you explain it? There are three demand drivers: risk, inflation rate, and interest rate. In my opinion, the most important gold driver is risk. But what's risk? When investors concerned about future and want to be safe, they choose gold as the safest assets and commodity around the world. After COVID pandemic, investors felt uncertainty about future and bought gold to be safe. After 2008 recession, they didn't have any good perspective about future of economy and bought gold to be safe. On the other hand, we have inflation driver. In inflationary situation, gold price is increased like other commodities. And when it will be stopped, when central banks want to increase interest rate and stop the economic growth. So gold and interest rate are negatively correlated in short term. Then, when interest rate is increased, then gold will be fallen. Sometimes gold has a huge movement. Why? Because all of the demand factors work in same direction. For example, in 2012, risk of market was decreased and long-term bonds yield rose up. So gold was fallen. After pandemic, risk was high and interest rate was low. So gold was rose. So if you want to analyze gold's drivers, you have to know risk, inflation, and interest rate. Now it's your turn. What do you think about gold in 2022? Comment it.